Good morning, everyone. Welcome to Morning Markets on Monday, the 18th of May. A couple of things to share with you this morning from our discussions as a team. The first of which was around the US equity markets performance last week, where you'll remember, if we cast our minds back at the middle of the week, sentiment was relatively subdued and we were seeing a relatively negative equity market performance. As the week progressed, we started to see a bit of an improvement, and that followed through on Friday when we had a positive close across the US equity markets. That's interesting for a number of reasons, and primarily the economic data that came out on Friday. I think if that had come out earlier in the week, we would have seen a more negative market reaction. So on Friday, we both had industrial production and also retail sales for the month of April, and they continue to show the weakness that we've come to expect as economies have been closed down. Industrial production falling over 11% and retail sales falling over 16%. To put that in some context, the industrial production number, with data in the US, we're very lucky that we have a very long run of historical data series. And what did we see there? That the industrial production, for a decline of a similar magnitude, we have to go back to 1919 to find something that's comparable. Retail sales continued the trend that we've seen in the UK data from the British Retail Consortium last week. That ongoing shift to online, it was very evident in the numbers. And indeed, I suppose that's something for us all to think about, whether COVID-19 lockdowns will accelerate that secular change to online and platform-based business. So that's something that we'll be able to continue to monitor over in the months and years to come. The other thing that we discussed this morning was around Brexit, sort of a word that hasn't been used in these morning markets for quite a long time, but we're starting to see increasing headlines about the challenges of the discussions. As we know, we're working towards a June sort of agreement on the framework. That seems to be proving challenging. How's that manifesting itself in the market? Well, we've seen sterling weaken over the course of the month, and that's just an indication of the challenges that really lie ahead. So we'll just have to monitor that over the coming weeks as we run into the end of June deadline for a framework agreement to be set out. The other thing that we've discussed over recent weeks is just commodity markets and what we've been seeing there, particularly in the oil market, but also in precious metals, gold and silver. Oil continues to recover, with both WTI and Brent trading above $30 a barrel today. That's a couple of factors that are driving that. I think firstly, the production cuts that we saw from OPEC Plus took effect from the start of May. The other thing that I've just been looking at today is the Baker Hughes rig count. And so they count the number of rigs that are operating in the US, and we continue to see quite a significant decline in that. And just to give you some perspective around that, there were over 900 rigs operating in the US this time last year, and that's now down to 329. So a very significant reduction, and that reduction continues on a month-on-month basis as well. So that's really trying to address that supply-demand imbalance that we've seen in oil markets. And also we have seen a reduction in the use of storage capacity. If you cast your mind back to 3 weeks ago, that was a very significant issue as we ran into the futures rule, i.e. moving from the May to the June contract. We will experience that in the coming days. So let's see what happens with the price. We may see some volatility around that. Turning to the week ahead, and there's a lot of economic data, as we've touched on before. It's backward looking, but we also do have some of the survey evidence this week, which will be a guide to sort of the forward looking thoughts that's happening. So that'll be something that will be worth watching. We do have a lot of Fed governors speaking through the course of the week, which will, again, given the impact that they had in the market last week, it'll be interesting just to see what they discuss this week. We did have the financial stability report from the Fed over the weekend, so I expect a lot of their commentary will use that as the basis of the discussion, but we'll just have to wait and see. We also do have the PBOC meeting in China. I think that could be quite interesting, just given the change in tone that we've seen from Chinese authorities over the past couple of weeks, and maybe their willingness to provide more support or stimulus to the economy, and one of those could be a reduction in the prime loan rate. So we'll look out for that later in the week. That's it for today. Please join me again tomorrow. Many thanks.